What's up everybody, it's Nenad and welcome back to my channel where I post videos about real estate and finance every single week. And today we're going over the top 3 stocks that I think are going to have really great growth throughout 2021. I've done quite a bit of research on each of these companies and I'll tell you exactly why I think they have tremendous growth potential. So without further ado, let's get right into today's video. The first stock on my list is Adobe, ticker symbol ADBE. Adobe is an American computer software company that created industry-leading products including Photoshop, Premiere Pro, and a ton of other cloud-based software products, all the way from photography to video editing, digital marketing, and much more. Adobe is currently trading at $474.42. And despite a global pandemic, in 2020, Adobe pulled in a record annual revenue of $12.87 billion, which is 15% year-over-year growth. Right now, Adobe has a market cap of $232.82 billion, which puts it in the top 50 largest US companies. Adobe also has a forward price to earnings ratio of 43.29 and a price to sales ratio of 18.29. Adobe also has a really great profit margin of 40.88% and a return on equity of 44.21%. This means that Adobe's management team does a really good job in deploying their shareholders' capital and getting a return on that equity. Analysts are rating this stock at a buy at 1.8 and the average price target is $557.34, which gives you some nice potential upside from the current value of $474.53. Also, the growth estimates are 16.67% per year over the next 5 years. Some of the biggest news that Adobe has recently announced is they're partnering with Microsoft in order to create a CRM system that's powered by artificial intelligence. And they're looking to expand this CRM into every single industry, including healthcare, the public sector, defense, automotive, and even into the aerospace industry. With this new joint effort, Adobe looks to capture an even larger share of the CRM applications market. In terms of their creative software products, Adobe is looking to capitalize on the fact that online businesses have boomed during this pandemic. More and more companies are going to be relying on Adobe's products for their online marketing, product design, and just overall online business. So definitely go and check out Adobe and see if their company fits in your investment portfolio. The second company on my top 3 list is Broadcom, ticker symbol AVGO. Broadcom is a global company that develops and manufactures semiconductor and infrastructure software products. You can find the company's chips in a wide variety of applications, including 5G, data centers, cybersecurity, artificial intelligence, and so many more. Broadcom even has one of the biggest industry's patent portfolios, sitting at 23,000. In spite of the pandemic, Broadcom stock has consistently outperformed the broader market. Broadcom is currently trading at $429.40. And in the fiscal year of 2020, Broadcom has generated $23.89 billion, which is a quarterly revenue growth of 12%. Broadcom has a profit margin of 12.39% and a 12.12% return on shareholders' equity. Right now, Broadcom has a market cap of $178 billion, so it's definitely no small company. The forward price to earnings ratio is 16.78 and the price to sales ratio is 7.72. Analysts are rating this stock at a buy of 1.9 and the average price target is $460.32, which is an 8.3% increase from its current value. Broadcom is expected to grow 18.2% in this current year and about 7.9% over the next 5-year period. Broadcom has nearly tripled over the last 5 years and nearly even took out Qualcomm. Broadcom's top customer is Apple, and this accounted for nearly 20% of their revenue last year. And Apple says that Broadcom is definitely one of their key American component suppliers. Broadcom even secured a $15 billion contract with Apple to sell them wireless components over the next 3.5 years. Broadcom is a well-diversified chip maker, and with new 5G products hitting the market and the demand for wireless chips increasing across all industries, Broadcom can certainly benefit off of this demand increase. With Broadcom's high dividend payout and their ability to weather this pandemic with minimal financial damage, I believe Broadcom will be a great long-term investment for any of you out there. Before we jump into my third and final stock, I really want to thank you for watching. And even if you're getting a little bit of value out of this video, I would really appreciate it if you hit that like button and subscribe to the channel to stay tuned for new videos posted every week. The last stock on my list is American Tower Corporation, ticker symbol AMT. AMT is a real estate investment trust and an owner and operator of wireless broadcast communications infrastructure in the United States, Asia, Middle East, and almost every other part of the globe. American Tower Company is the largest tower company here in the United States. American Tower is currently trading at $216.46 and pays out a generous dividend at 2.2%. Their market cap is $97 billion, and they have a forward price to earnings ratio of 38.91. The company has about a 24% profit margin and 34.18% return on their shareholders' equity. American Tower also had a revenue of $7.84 billion and a 3% quarterly year-over-year growth. Analysts are rating this stock as a buy at 2 and an average price target of $280.78, which is about a 26% increase from its current trading value. With the incredible growth of wireless data and 5G networks, I certainly see this company benefiting off the increase in demand. More and more people are going to be connected to 5G, and this means that more towers will be needed to build in order to increase this connectivity. Intel predicts that by 2025, more than 1 billion 5G devices will be in use, and by 2035, that 5G will produce $10 trillion in economic output. And with 5G not having the ability to travel as far as 4G, more towers and infrastructure will be needed in order to make 5G a reality. American Tower Company was in 62 of hedge fund manager portfolios at the year end of 2020. The all-time high for this statistic is 61. This means that the bullish number of hedge fund positions in this stock sits at a current all-time high. When picking stocks, it's important to look into the future and realize that tech companies are going to dominate the market even more than they already are. So make sure you take a look at these 3 companies to see if they fit in your investment portfolio. I want to thank you again for watching, and I'm sure I'll see you next time.